Residential property is going through a crisis of confidence at present. The market's being stalled by a continual conveyor belt of concerns. We're worried about things like rising cost of living, the threat of a housing bubble, what's going to happen to interest rates, the state of our economy, maybe the state of overseas economies, the defaults happening overseas, the carbon tax, a whole lot more. Hi, I'm Michael Yardy, and currently the market remains balanced between positive forces, our strong fundamentals, and negative forces, poor consumer confidence. And until some certainty clears, we'll see many home buyers and investors sitting on the sidelines, waiting to see how things pan out. They're scared of making a mistake and either buying the wrong property or overcommitting to something that may slide in value. Now, I recently read a good analogy. If a fortune teller told you there was a 10% chance of dying in a car crash today, many people would stay at home or they'd catch a train. It's much the same with property at present. The chances of our market crashing are small, but the average Aussie is playing it cautious. So I guess I'm asking today, is this a new era for our property markets? Before I discuss this, I'd like to invite you to join me at my upcoming one-day training that I've called How to Prosper in a Flat or Falling Property Market. I'll be conducting these trainings with finance strategist Rolf Schaefer and property tax accountant Ken Race. And we've been involved in property through a number of cycles, and we have seen times like this before. Does this mean we know all the answers? Well, clearly not, but we understand some of the pitfalls to look out for and some of the opportunities to pursue. So when you join us at the seminar, I'll outline my investment strategy and what I'm doing with our property portfolio. Does this mean you've got to change your investment strategy? I guess the answer is I don't really know, because I don't know if you've got a strategy. But if you click the link below, find out all about these trainings, including my personal money back guarantee, and then please join us. Okay, back to what's happening in our property markets right now. Over the last couple of years, our property markets were similar to all the cycles I've invested through. Fear and greed got out of balance, and the price of some properties increased by over 20% for a few years in a row. Many Australians stopped thinking of their home primarily as a shelter and as a long-term investment, and they began to think of their houses either as a get-rich-quick scheme or a very large ATM. This was spurred on by rising property values and really easy credit. Banks were lending money at low interest rates and high loan-to-value ratios. But much of this has changed now. More recently, many of us have found a renewed enthusiasm for filling our financial coffers. We've entered an era where we're saving rather than consuming. The fact is we're now saving 10 to 12% of what we earn, which is very different from a few years ago, when we were spending more than we were earning by borrowing and borrowing more. This renewed thrift is a good thing. Higher household savings, lower credit card debt, and paying off your mortgage sooner is a sign of strength rather than weakness. And that's going to protect us if our economy hits some speed bumps along the way. So where are we in our property cycle at present? Well, you see, I'm still hearing today from investors who are concerned about all the negative media. And so what I tell them is that the world's financial markets and our property markets are behaving normally. This is what happens. Look, let's be clear. The property cycle peaked over a year ago now. But that doesn't mean growth in values has stopped forever. It means the markets in our major cities are taking a breather, allowing fundamentals to catch up. Some properties are going to continue to fall in value, others are going to hold their prices, and yet others are going to creep up in value. If you've owned real estate for a while, you would have realised by now that property markets always move in cycles. There are periods of rapid growth, followed by periods of flat or even negative growth. Prices do drop, followed by another move upwards. I've often suggested that the sooner an investor has traded or invested through a cycle or two, the better the investor they'll be. They'll then understand that slower phases in the property cycle, such as the one we're experiencing right now, are normal. And you know what? They'll actually know how to take advantage of it. The good news for property investors is that while prices remain flat, rents are currently rising. Now, I guess that means investment yields are going up. Now, the market is correcting, it's not collapsing. You see, last week, RP Data and Australian Property Monitors released their most recent statistics, and it showed that around Australia, some markets have stalled, others are dropping a little bit, and others, like on the Gold Coast, they're almost collapsing, aren't they? But that's about the only place where the market's really going down. So many of the doomsayers were predicting it was going to happen everywhere. It's not. The markets are just correcting. Of course, these overall figures don't really indicate what's really happening. Now, I accept that as our cities mature, they become more unaffordable, to some. But as you look deeper into these figures, you realise that in every state we've got multiple property markets, with some properties still increasing in value, while others are falling. These different sub-markets, they're defined by different geographic locations and also by different price points. Recently, the higher-end properties have been suffering, and the more affordable end of the market has held its value. Now, there's no real surprise in this, as over the long term, lower value properties have always had lower price volatility. Their prices haven't fluctuated as much as high-end properties. But in general, they've also had lower capital growth. Okay, so you're probably thinking, well, that's all interesting, what's ahead? You see, over the last couple of months, I've spent a lot of time researching our property markets, the world's economy and financial matters. And I've done this to protect my own portfolio, to help our private clients, and to educate readers of my blogs. I've spoken to as many experts as I could, not theorists, but experienced authorities, and I've poured over large amounts of research data and compared my conclusions with that of my inner circle of property friends. And we've come to some very interesting conclusions. Now, one of the conclusions we came to is we're going to have a property crash sometime in the future. But this isn't it. Look, our strong economy and our property fundamentals won't allow that to happen this time. But I guess in due course, when fear and greed get out of kilter once again, it is possible our markets are going to soar to heights that will see them fall. But currently, there are some great opportunities out there, and the markets are going to reward those who know how to take advantage of them. If you sit on your hands worrying and waiting for a crash, you're going to miss out on some great investment opportunities right now. The other thing we came to the conclusion of was that property investments, the property investment strategy used by the vast majority of investors out there in the past is not going to work in the next couple of years. I'm not talking about positive cash flow properties, as in my opinion that never worked anyway. But there is a strategy that will work well in our forthcoming, more challenging times. And I'm going to explain that in detail at my upcoming How to Prosper in a Flat or Falling Property Market one-day training. And I'm conducting them around Australia with Rolf Schafer and Ken Race. Click on the link below and find out all about it and reserve your seat right now. The other thing we decided is we are in a new era of property investing at the moment. We're not going to have extraordinary property growth for a while. But I've invested through these times before and I've actually prospered through them. In the last year I've sold a number of properties and I've actually recently committed to others. At my upcoming seminars I'm going to explain exactly what I'm doing. So again, just click on the link below, find out more, reserve your place now. Recently I've spoken to a number of investors who are hurting. They're hurting with some of the credit changes happening, the credit criteria that the banks are putting on them. Some have even had to sell some of their investment properties, and others are worried they may have to in the future. Clearly their investment strategy didn't work for them. Rolf Schafer will show you what the banks are looking for today when you join us at our How to Prosper in a Flat and Falling Property Market trainings. I also realise that there's going to be some local consequences to the overseas problems. And for property investors, these will probably be hit hardest in the areas of interest rates and the availability of finance. However, overall our property markets will be underwritten by our generally strong economy, the deficiency of housing at a time of increased demand from our growing population, rising costs of construction, and maybe even the carbon tax is going to make things a bit more expensive. But don't get me wrong, I'm not suggesting we're having another property boom. Well, not just yet anyway. What this means is that to become a successful investor over the next few years, and to take advantage of the opportunities this changing market will present, it's very likely you're going to need to take a different approach to the one that you've maybe used for the last couple of years. I know some viewers of this are definitely going to need to do different things to protect their current property portfolio. I'm going to be explaining exactly what to do in our upcoming one-day trainings. So again, I ask you to please click on the link, find out more, and come along and join us. I'm going to keep you up to date about the changes that are happening in our market in future market updates just like this. But it's also probably worth reminding you at a time like this, with all the changes going on, that no one can quite help you like the independent property investment strategists at Metropole. Remember that the multi-award winning team at Metropole have got no properties for sale. That means their advice can be unbiased. It can be independent. So if you want to find out a bit more about what's happening in your local market, why don't you come along to a free couple of hour briefing in our offices in Sydney, Brisbane, Melbourne, or with our affiliates in Perth. Again, there's some details of it in the link below. And lastly, there's just so much happening in the property markets nowadays. I'd like to keep you up to date every day with my short blog. So just click on the Michael's blog link up the top there and subscribe to it. It's a different subscription to my regular newsletter, and it gives you a short daily update. I look forward to sending you my next update in 2 weeks' time. In the meantime, have a great week. Make it a great week. This is Michael Yard.